Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. So crypto this week, Bitcoin continued to consolidate in that sort of area. Got as low as 58K. I had been saying I was looking for a bit of an ABC correction. We had got the A and the B last week. We got our kind of C. I was looking for it to go a little bit lower. Didn't quite get to my target of around 57K, annoyingly. But now it's staged a pretty healthy bounce, already back up to 63K. Obviously, I'd flagged the October expiry, which I got a load of flack for about my max pain FUD. But, you know, we struggled to break higher, right? And we printed the expiry at around 60.5. And then post the weekend, we've managed to get ourselves back up there, right? So I don't know if it had an impact, but, you know, we didn't break significantly higher before that expiry, right? It was a fairly large expiry that October, yeah? Now, Ethereum, on the other hand, is breaking, right? So Ethereum's kind of at its highs right now. It's taken out that 4,400 area. So things are looking much more bullish on Ethereum. Now, if we look at the cross, which we obviously like to keep an eye on, clearly broken above that downtrend. And now arguably next target, I mean, it's kind of got a bit of resistance here at 0.072, which it seems to have respected for now. But a break above here is pretty much going to send it a fair bit higher between this 76 and 0.08 region, basically, right? So, you know, Ethereum definitely setting up for a period of outperformance now, yeah, as it's also breaking its all-time high, yeah. You had Goldmans weigh in with a report saying that their target for year end was 8,000, and that they're citing an interesting one. Let me share this chart. Basically, they're looking at the correlation of Ethereum and two-year forward inflation swaps, okay? Which, you know, might seem a bit arbitrary, but here's the chart. So they're saying, if you look at a log chart of Ethereum, project that on top of the dollar inflation swap, two-year forward, that's tracking pretty damn close, right? And you've just had a ratchet higher in inflation expectations, and arguably Ethereum's got quite some room to run to catch up with that. Okay, but personally, not sure correlation equals causation. So I don't know if that's the reason we're going to get a run on Ethereum. But it does have some positive dynamics heading into year end, right? You've got obviously the optimism around ETH 2.0 and the merge. You've got a potential technical breakout given that it's taken out the highs, and look at the cross rate, similarly looking bullish. You've got rumors that an Ethereum ETF might, you know, get approved early next year. So a few things fueling the rally, basically, right? On top of that, you've also got the issuance. The net issuance has turned negative. So, you know, the EIP 1559 upgrade that started burning tokens, that has led to net negative issuance recently, right? So that, again, taking supply out of the Ethereum market, what does that do to price expectations, right? So, you know, we may well see a bit of a run into year end, and that's clearly what a lot of people have been setting up for in the vol market, as we mentioned last week with all the call buying, which we'll talk about again, yeah, as we go over the vol analysis. On-chain stuff, what's been going on? So, you know, after the recent pullback, short-term holders are still in profit. So if you look at what the short-term holder profit numbers look like, profit to loss ratio, they still remained in the green. So potentially, no need to panic there. Maybe if we got below 55K, we might see some of the short-term holders kind of capitulating and dumping their holdings, right? But for now, the pullback hasn't been quite violent enough for them to need it. So that's encouraging. Now, some of the weakness last week, we did see a load of liquidations on exchanges, particularly the Chinese Hobby Global, if I'm pronouncing that right. They closed a load of accounts, obviously, to get in line with like the Chinese regulations. You can see here, liquidations are the kind of orange bars, and you had a load of liquidations kind of come in middle last week. 29th of October was like a cutoff date for the exchange to basically close a load of accounts. So open interest on that exchange dropped by like 80%, right? So I think that may well have triggered some of that weakness, and that's done for now, right? So you've had your price drawdown, you've had a bunch of liquidations, that suggests that the kind of flush out of maybe weaker hands is kind of done for now. Kind of echoing that, you'd have this funding rates normalizing as always a decent indication of how much leverage is there. So when we reach those highs, those new all-time highs on the 22nd or whatever it was, obviously funding rates had popped a bit, and then you've had a couple more spikes, but nothing too dramatic, and now funding rates are down to very normal levels, right? So that suggests a bit less leverage, a bit less fragility in the market, which on the margin is fairly bullish news, on the funding side. Nothing too spectacular on the on-chain stuff really that stood out to me this week. Now if we go to the vol side of things on crypto and bring up a few vol charts, what have we got? So realized vol was kind of hanging, drifting lower until this recent up move in Bitcoin that we've just got of around 4%. So it's kind of helped realize kind of recover a little bit. But you had realize hanging in the sort of mid 50s. It's popped its head above 60 on a 1 week basis after that recent move. But, volatility in the front end hasn't really moved too much on the week on week. You see the front end kind of where it was. Actually, most of the movement is coming in the Vega part of the curve, right? So you're seeing March, Jan's now listed expiry after that October rolled off. So you're seeing the DEC, Jan, March, June, that area all shifting down only by a couple of vol points, nothing too dramatic. But the point being that the curve had got steep enough that as you're now seeing stability and the market sort of not doing too much, that back end starts to come under pressure, right? Very normal price action for a vol curve that collapses into steep contango first, and then the back gets kind of dragged down by the kind of lack of realized and the roll down in the term structure of that forward volatility. Those of you who have done my options courses will understand that. And then on short dated skew, that's been pretty volatile. Short dated skew tends to be quite correlated to what spot is doing. So short dated skew being the green one, 1 week skew flying around, it kind of went for calls, then it flipped back towards puts, 3 vols or 5 vols over for puts, and now it's back to neutral territory. 1 month skew kind of has been drifting back towards puts as the market kind of failed to really break to the upside after making those highs. But then you look at the skews in anything longer, 60 days to 1 year, that's all hanging around the 4 to 6 vols for calls, basically, right? So that still remains firmly on the call side of things, which not surprising, right? Most people who you'll survey on a 2 month plus horizon are thinking that Bitcoin's going higher, basically. All right, and then if we bring up the kind of block sniffer, courtesy of Genesis, what have they been seeing? Actually, let me bring this chart up. This one's quite a good one. So if you now look at where the kind of open interest landscape really lies in Bitcoin, you can see that December expiry stands out as a massive sort of open interest, 80,000 odd options. pretty much most of the open interest is sitting in December now, right, in Deribit. So then we go look to where the strikes are, where the big strikes are. Well, you've got these really big strikes in the 100K and 120K region. You've also got a chunk in the 80K region, right? So generally, call buying, call spread buying seems to have been the sort of flavor of that flow. And there you can see where the big strikes kind of reside. Yeah. So if we do break 70K and start to head into that area going into December, where those options actually do run into their Greeks, then we're going to see some interesting activity, because the dealer community has got some large positions there, basically, right? And you're likely to maybe see rolling of positions from the client side rolling into next year. So we'll see how that plays out, basically, right? But a break of 70K in spot is gonna trigger a fairly decent explosion in the Greeks in some of these options, and that may fuel some more rallying, basically. It might kind of help get us to where we think we might be headed in Bitcoin going into year end. Yeah. And then, it's been fairly balanced, the flows, the blocks in Bitcoin from calls and puts, still much heavier on Ethereum, I would say, if you look at calls. Obviously, we've been laughing and talking about some of the flows in the March that we've seen from our friends at Real Vision. They were laughing in their daily briefing last week. Raoul and Ash were chatting about the impact that they basically had on Deribit. And pretty much they managed to break the market, right, and take the vol surface up by 10 or 20 points just by that flow, because they got a load of hedge funds to pile into that trade, right? So having a little laugh about that. If you look at the block sniffer in Ethereum, you can see we've got June and March options popping up there on that upside area, anywhere between kind of 8,000 and 10-15,000. But the flows are 85% to the call side. It's kind of going to be like that in Ethereum for a while, right? Unless this market really significantly rolls over and starts going back below 3,500, all the action is going to be on the calls. We know what the positioning looks like. We know that dealers have been taken short, and really it's going to be a question of how fast the rally happens and what sort of vol squeeze we're going to see on the back of it, basically, right? I've been a big fan of selling that expensive upside. Now that Jan Expiry is actually listed, interestingly, if I was putting on a fresh position, I'd probably still own November for the next couple of weeks. So using November call options isn't a bad long leg of that trade, because that front end's still relatively cheaper. But I'd probably be selling January upside against it, basically, because the curve is still nice and steep. You're getting a decent premium out of January, but then you're not having to get involved with that positioning and being caught short with the whole market in that March area that all those clients have bought, basically, right? So I think that's probably a better way to play the trade. It's got the same dynamics, it's got the same carry profile, takes advantage of the steepness of the curve, takes advantage of the call skew. So using November calls long versus January calls short isn't a bad trade to be long Ethereum for the next 2 weeks. Once we get to mid-November, I would probably roll November into December calls, keep the Jan short, and keep that structure that way, basically. But basically what you're trying to do is be long Delta, long Gamma, and be short Vega, and keep your carry relatively neutral, right? That's the goal. So then whilst you're sitting around waiting for the Ethereum rally, you're not just bleeding all the premium, and you're actually kind of managing that theta bleed quite well. Yeah. Anyway, that's it from me on crypto and crypto options. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.